Cheers to you on this Super Bowl Sunday retail trading team. This is your routine briefing. Let's begin today's video with a review and analysis of our latest warm-up as we look ahead to what should be an exciting week, uh, really triggered by Tuesday's CPI report, which I think is going to give us our next big market move, and we're going to look at the levels to watch leading up to that. So just real quick to look at Friday's warm-up, we had a couple interesting things here. So in the morning, we had that increasing relative volume with the contracting overnight range, which kind of implied that uh, expansion of the range as well as kind of those uh, larger rotations. And we didn't see that quite yet. So we didn't see that on Friday. I'm not sure we're going to see that on Monday. Obviously, we can. We'll have to reevaluate then. However, I really think that this intraday look is more setting up for Tuesday than anything, where we're going to get that CPI report, and I think that's when you're going to see all of this play out. I'm not expecting too much on Monday. We'll look at specific levels, yet I really just want to emphasize Tuesday is the big day, and I think that's going to be the next major catalyst for the next several 100-point trend move, and we're going to look at what levels to be watching as we move into that. So besides that, you saw those expansive pivots, which implied that rotation back toward the mean. Yet again, we didn't really see that on Friday. It was really quite bullish. You saw a couple tests near the uh, not the center of inventory, but kind of the outskirts of that, and we saw that move away. So we saw a lot of that dip buying that we kind of expected once we filled in the volume of that 4090 area, and we went down as far as 4060. So we really cleaned up that prior month value area high and that prior week value area low level. We'll look at it more closely in the TPO chart. Yet I think that kind of played out. And yeah, we're really looking at SPX 4100 for that move back into the channel. And again, anything that happens on Monday is really grain of salt because CPI, if you recall, we've seen those 100-point moves in 1 minute. So I think that everything's really just leading up to that. So just wanted to cover the warm up real quick because that's what we always do. And now we can jump right into the daily chart to watch, to look at what we're going to be watching moving forward. So um, hmm, I just updated my uh, my platform here, so it looks like the data is not quite coming in. So just give me a second here to see if this doesn't load, and if not, we will restart the video in just a minute. So here we go. So really what I'm looking at here is going to be the path of least resistance as it continues to load. We're kind of looking forward to which way gravity, if you will, is going to take us. In the stock market, sometimes gravity can push us up. So the path of least resistance, in my opinion, is going to still be higher, and it still revolves around that major trend line, which you are not yet seeing on your screen. That major trend line that we broke out of after the jobs report a couple weeks ago. As long as we're above that, in my opinion, we still do have that bull market look. So hopefully this will load in the next few seconds here. Okay, so like I said, path of least resistance, in my opinion, is still higher. We still do have that inverse head and shoulder low. You can see it here. We just barely wicked that first demand zone that you're seeing, that little blue box from 40.85 to about 40.40, and obviously we closed outside it. Um, I had this ellipse circle that was just kind of that consolidation that we were watching, and we're still seeing. We'll see it on the other chart. You're still seeing that kind of flaggy type look. So what I'm looking for is perhaps on CPI a retest of this trendline area, uh, just really anywhere in this zone here from 4,000 to about 40.40. If they do push it down first, I think will provide a nice little potential buy the dip spot. Again, we're just watching what happens around those trend lines, and that's going to inform, I think, the next major move. If we push below and hold below that 4,000 area, specifically I'm looking at SPY 400, that's when we might see that push deeper down into even the 3,800 handle, and I dare say the bears could take back control of the momentum if that does happen. So that's kind of the look on this uh, daily chart. So if we just want to look at a little more granular on the macro chart itself, so this is the 365-day chart, I want to bring your attention to first that ellipse. So all of these ellipses and trend lines were drawn before we had that sell off, and you can see we're still kind of filling out this flaggy type look. They tried to peak below it, popped right back up on Friday, and you're having kind of that piercing look, piercing pattern develop on that candle. You're seeing this first low volume area and really bounce off that mini HVN here. That's still holding. First little bit of cluster is still holding. And like I said, as we move into CPI, I think it's very possible that you might see some move down into this area. That 3990 POC remains a magnet as long as we are below that value area high. And if we get there, I'll be frankly kind of surprised. I think we'll bounce before that. You can just see there's just a bunch of support along there. You have your yearly VWAP, you have your 200 SMA, which will likely begin to curl up a little bit between now and Tuesday, and so that would be kind of the buy the dip area. So my first reaction, if we do get that sell-off, is going to be buy the dip, unless we get a major break of that trend line, and that's why you can just see that these clusters, one of those order flow lab studies, that should provide a nice area of support, even with a big catalyst like CPI. That is a really significant cluster in my opinion there. So 40-50, like I said, 40-50 down to that 3990 POC, all support, um, as far as I'm concerned there. And you're not seeing the volume. You didn't see the volume on the sell-off. You didn't see the volume the day before. You didn't see the volume yesterday because again, everybody's looking forward to that CPI catalyst. And as we will likely continue to fill out this flag. So looking forward to tomorrow, I think it's best to examine it on a 4-hour chart. I circled that nice little ellipse there. And what I'm looking for, I think, just kind of to be super granular, looking purely for 0DT, is I'm looking at that 4110 level on Monday. I think it's going to be an important level to watch as we potentially kind of build out what could be considered a right shoulder. I don't really put too much emphasis on that pattern as far as Tuesday is concerned. I don't think it's a tradable pattern just because of the power of that catalyst. Yet as we look at 0DT tomorrow, I think that 4110 area will be a nice place to watch for consolidation, and I think it'll offer some potentially cheap 0DT premium at that level for Monday if we do consolidate around it. I will be looking at iron flies specifically at that 4110 level, and I just want to see us kind of fill out that right shoulder look on Monday. So that's just kind of a quick look for tomorrow. I think that's going to be relevant for tomorrow's trading. I will be really surprised to see any significant move one way or another. Yet we will obviously fill out the warm-up document as always. Just to flash that again, if you're not familiar, this is in the description of this video. This document is filled out by 10:30 Eastern every day, and it's kind of what I look at to inform my day trading um, biases. So you can see on Friday, I had a long bias until the loss of overnight low. We never lost that overnight low, and I thought shorts were acceptable near that pivot at 41.95. And if you look at the majority of Friday's action, it really played out well. It was a bit choppy. I didn't have the best of days, and that's just because I did get chopped a little bit. Yet, the um, general look played out well, and this warm-up document has been doing really well for us, really since the beginning of February. And yeah, so 10:30 every day it's filled out. If you want to take a look at it, that is in the description to this video. So moving on to our next chart, we're going to look at what I think is the most important chart right now, which is our chessboard TPO chart, 30-minute TPO. And again, this was the consolidation that we saw break down on Thursday, and you saw those V-shaped profiles leading up to it. This is an overnight profile. You saw those V-shaped profiles leading up to it, which signifies longs exiting the market. We really had that perfect entry that I talked about where we popped above the channel real quick. I actually redrew it. We popped above that channel. You had that poor high, and we popped right back in. That was a nice little false break look, fake break look, and it played out well for Thursday as we kind of had that follow through into that prior month value area high, that prior month close area, and this was I adjusted everything obviously because it's a new week, but that was also the prior week value area low around there as well. So really nice retrace. So just again looking at the path of least resistance initially for the CPI news, again crazy stuff happens. We've seen, I think, 3 of them in 2022 had those 100-point moves in one candle, at least two, but definitely uh, opens up to some really crazy moves. And yeah, so I think that the prior month POC, if they do want to break it down first, again, it takes us into that 4,000 to 4050 cluster. I think that is the path of least resistance, and that will be, I see as the perfect buy the dip spot, if you will, if we go down there. So yeah, so that's kind of the bear case for the initial move on Tuesday, and then the bull case is obviously going to be, which would be, in my opinion, a surprise at this point, would be just a pop above that prior day high, and at that point, or excuse me, not prior day high, that overall high at about 42.10 here. And in my opinion, if we do see that, um, we could take us to new highs and beyond. Is all I put in my little notes here. I don't know where that momentum will stop. So my play for that is really just going to be playing the momentum and seeing how far it'll take us intraday, and then obviously Tuesday night we will have another debrief, and we'll look at next steps there. So that's just kind of the two areas I'm watching, that prior month POC, which I've emphasized for a while in this video, that 4,000 to 4050 cluster. I think would be a really nice buy the dip spot. And yeah, they pop it above. Obviously, we always look for those fake breaks. Yeah, any continued momentum is definitely a breakout. And if I just scroll up on this chart here, you can see there are some potential resistances, poor highs and singles as we go higher. But I think that the emotional side of things, if we do get above that and make a new high, I think the emotions can take us pretty much anywhere. I don't really have an upside target for Tuesday if they take us there. Again, I'm just going to be playing the momentum, and then we'll look to see where we stop to kind of, um, look forward toward Wednesday after that. So just really clear levels, prior month POC, 40 30ish, 40 40, anything in that 4,000 to 4050 area is a decent buy the dip spot. And if we do pop above that prior high at about 42.10, initially always looking for that fake break. Yet if we start seeing the continuation of trend, it's not something I'm going to be getting in front of on Tuesday. That is for darn sure. So just to kind of look at what happened on Friday, um, a little indicator that I do like, it's just kind of a basic sentiment thing, is how do we close on a given Friday? And you saw a really bullish close on Friday. So to me, that's implying that there were buyers, real buyers, in near that low, and that you do have perhaps more longs entering the market. Um, that's just kind of based on the momentum that we saw on Friday. Yeah, you look at the profile here, it still has that B shape, that lowercase b, which again, I actually show this link. This is a very helpful link for. It's linked right here somewhere. Here we go. If you go to just highlight this weekly ES um, cell on the warm-up document, you click this. It'll tell you a little bit about the 4 common volume profile shapes. You can see what I mean by that lowercase b, and we are seeing that in the TPO. So yeah, we had that aggressive bullish close on Friday, yet it still has a B shape, so it still has the implication that the longs are exiting the market. Perhaps they'll be looking toward that January POC that I keep talking about on here, near that 40, 30-ish area. And I just pointed out on our volume by profile chart, or excuse me, volume by price chart, so you can kind of see where that is on the hourly chart here. So what I think is going to happen for Monday, and again, why I'm looking at that 4110 area for a potentially nice, cheap premium location for some flies or short calls, or just trying to collect what I think will be cheap premium there. If you look at the RSI on here, I don't think that you're going to see that massive momentum breakout move on Monday before a big announcement. I think that price is going to want to consolidate around here. I think you're going to want to see a bit of a recharge, so that kind of settles down into the middle-ish of the range before CPI. Again, RSI is a fickle indicator, yet that's just kind of what I'm going to be looking for, just based on everything else that is going on here. So finally, just one more chart to look at today, and that's going to be the all-important volatility chart. So really the most important thing to look at here is where we are in the VIX. So if you look at the close of VIX on Friday, we are above that 20 area. We're at 2050 though, so we're still kind of basing, consolidating. looking to break out or break down one way or another on that VIX chart. And I think that watching the futures on Tuesday is going to be super important. So again, Monday I could see us maybe going back toward that 2160 area, maybe into 2095, maybe a little higher even too. Yeah, on Tuesday, what we're going to be looking for, what I'm going to be looking for, is to see if VIX can hold this breakout, so make higher highs and move towards that 2360 area up here, which I think is the, I'll draw a nice little arrow, which I think is the next major uh, resistance. That 2360 area. Or is it going to take us to new lows? And if we start to break below 2025 again, we'll obviously look toward the low itself at 1950. Yet if we do really start to break, excuse me, below that 2025 level, I think we might see that next major trend move to the upside. So as long as we're above the major trend line, I'm assuming that the 2022 bear market was cyclical and that it did conclude on October 13th. So if VIX finally breaks down here as price makes that new high, really the next level I'll be looking at is 4,400. So that's not expecting us to necessarily get there on Tuesday. Yet if we do start to break out there, I'm not getting in front of the trend. I'll get in front of it for that fake break if we get the signal first. Yet if we start to move up, I'm not getting in front of that because I think with the VIX confirmation, that's going to be telling us that a major move to the upside is coming. So yeah, so those levels are super important. I will note them on that warm-up document for Tuesday, of course, and for tomorrow. So for tomorrow, again, just kind of looking at that 4110 level, what happens around there, and then on Tuesday, those major chessboard levels, which I'll just review one more time. So that prior month POC and that prior high at 4210. So downside target by the dip target, and one upside target to first fade, and then look for that momentum push higher. So it'll be interesting. I mean, if we go revisit that trend line, perhaps we could even consolidate around it. Yet really just keeping the big picture in mind, it's all about what happens at either that new high or at the trend line. We don't have to make it too complicated. I think there's going to be plenty of opportunity either way, especially if we can resolve this inside week that we had last week one way or another. So, yeah, so those are going to be the levels I'm watching for Tuesday. You got the levels for Monday, and that is all we have for the charts for today's briefing. So, as always, please feel free to tweet at Routine Trader with your thoughts. I'm also happy to answer any questions you may have in the comment section of this video. The newsletter, good to go, finally. So you'll be receiving the first issue of that revamped newsletter next weekend, and I think you're going to find it a little more valuable than in the past. It's going to be a fun little challenge that we're going to be starting there relating to futures, and I'm excited to finally have that finished. It's been a while. It's been more than a month, so apologies for that long wait. As I've mentioned, it was a little more difficult getting the data imported than expected, yet we're finally good to go there. So finally, if you did enjoy today's content, please give the video a like, as that does help Routine Trader with the YouTube algorithm. And with that, enjoy the Super Bowl if you are watching it. I personally do not have a dog in the fight, so it'll be a victory either way. I think my girlfriend's brother actually has money on the Eagles, so I do have to root for the Eagles. So I believe the term is fly Eagles fly or something. Anyways, so yeah, so enjoy that if you're watching that. And regardless, until tomorrow and until Tuesday and until we talk again.